So I have several points to talk about on today's price action, including what's going on here at the end. There's an important point I want to make. Looking at the first trade, big gap up, but not breaking out above the prior day's high. So it's still within yesterday's range, which would increase the chance of some kind of trading range today. If it was strong enough, it would have closed opened above that range. Now, on the open here, you can see there's two legs down. So two bear bars here, pull back, and a second bear bar. And that creates a little double bottom right here. So double bottom here and bull bar. So even though we're high up in yesterday's range, I still wanted to look for longs if we can, if we're finding a possible bottom. So two legs down, bulls will look to buy above this bull bar. I think they'll be quick to get out though, because they'll be concerned about a possible failed breakout of yesterday's high. So they'll buy, and if the market keeps going up, that's good. But if something's off with that, then they'll be quick to get out, I would think. So market does start moving up, and it does get above yesterday's high, which is right here. The trouble is it doesn't get too far, and all these little tails on the tops of these bars, these are all failed attempts to break out above that. And the market ultimately ends up pulling back. Now, on a gap up like this, and when the market kind of rallies fairly weakly, the market might look for this to be a reversal, and then a reversal that ends up testing the gap. So the close of yesterday and the open, there's a big gap there. So the market might want to come back down and test this. Often it needs a reason to do that, and one would be a failed breakout above yesterday's high. So if the bulls are buying, then they can't, then they have to get out of their longs, then that might be what fuels the market to go lower and come down and close this gap. So weak rally, some kind of wedge top you could draw in different ways you could draw it, but wedge top. Would bears short blow this? I think swing bears would. So the bears that are thinking they do want to try to get profits down to this close, I think they would be selling here. Sellers for a scalp, probably don't have high enough probability to try to get like a 1-to-1 here. I would rather avoid doing something like that. With these bars are so large, too much news, too much going on. But traders doing this for a swing down, I think that makes sense, because this range on the open has not been too large, right? It's large, but relative to prior days, this is only 70 points. When if you watched the review yesterday, the average bar's range in here got up to 80 points. So yesterday, the average bar itself was 80 points in here compared to this whole range, which is 80 points. So this is a large range relative to the ranges we're having. This is small. So this is probably going to double in size. So bears will look for an early swing trade, and the bulls will as well. But the bears end up winning here. 8 bars down in a tight channel, and then a little pullback, and then 2 more bear bars. So this was enough to break below the moving average and break below the low of the day. And now the market has its eyes set on this close. So now, pretty much, the bears are going to get down here unless the bulls can stop them. So the bulls try to stop them here and try to stop them here. And then you can see the market kind of turning over right here. And this is a trade that I love to take. So several things going on right here. You have the low on the open that we broke out below. Now we're coming back and testing that low twice. We're also stuck below the moving average now. So all these here, this is all stuck below the moving average. Eventually the bulls give up and then bear short, and they try to get down to the target, which is the close. So we have this gap down here that wants to be filled, and this is where bulls will be giving up and bears will be stepping in to short. So I think this is a great place to get short below that. If you are selling here, a couple ways you could manage that trade. One, One is to go for 2 times your risk and take off half at 2 times your risk. So you sell here and you take off half your position here and then move the rest to break even. And then let the rest ride maybe down to the close of here or the overnight low down here. I would rather just get out everything at the close of yesterday. But so either you do half off here and let the rest ride, or you just you basically just hold on until you get to the close of yesterday. So what I mean is I think I would rather take off half here, but then I would take off my full position at the close. I don't think I would continue to short down below yesterday's close, so through here. So I really won't have any other shorts marked through here. One, because there's not a great short. But then two, we've already kind of passed this target, so I'd rather not be looking for more shorts. Now, the point I wanted to make over here as we get closer to the end of the day is that we're in this big bear trend, and we still are. But once we're late in this bear trend, then you have 2 bull bars that are pretty strong. The 2 strongest bull bars of the day. And this is happening somewhat late in a trend. This might be the start of an end of day trading range. So these 2 bars. And then from there, so far, it has been a trading range. We'll have to see what happens in the last little bit here. But I would be more cautious on shorting, because now the bulls were able to buy up 70 points there in 10 minutes. So a lot of buying happened right there. More likely to be a trading range here instead of continuing down, is what my thought would be. So you could look at this as a spike here, then a channel, and then now we're going to that trading range. And you can see this has been weaker than this was or this was. So these 2 big bull bars, that's a sign that we might be transitioning into a trading range. And you'll have more bulls willing to buy below bars. And bears, instead of selling below bars, they will be selling above bars. Here's the daily chart. There's still lots of room to the moving average. So we'll have to see. We'll have to give it a few more days and see what the market can do. Is this going to be a second leg off of this that ends up failing here, and then we move higher and then go into a trading range? I think that's a reasonable idea. There's still a chance that we'll continue to go lower, but are we going to really go lower as quickly as we have been? Like we had these 2 days, 600 points, it dropped in 2 days. Are we going to have another 600 point drop down to 4,000 in just a couple days or 3 days? Probably not. I would expect that buyers are buying here and they'll make money, or they'll be able to buy lower and scale in. And that's basically what I'm doing with my long position as well. So we're also at 5,000. That's just a really important area of support and resistance. So probably going to have some sort of continued sideways movement here for at least a few days. So yeah, those are my thoughts. Let me know if you guys have any questions, and see you tomorrow.